Hello, everyone. Welcome to our third episode of BDO's PE Market Pulse, where we invite a leader in the private equity ecosystem to share their thoughts on current market activity. I'm your host, Bram Mundy, National Leader of BDO Canada's PE Practice and Assurance, and I have the immense pleasure of having Gil Nayod today joining us. Gil is a partner at Virtu Capital, a Canadian private equity firm that invests in technology companies that are growing and have scalable business models with a focus on software and software enabled businesses. So, welcome, Gil.
Hi, Ram. Nice to be here.
It's a pleasure. So, tech is always an interesting sector and very close to my heart, of course, very close to your heart as well. So, I know we're going to have some fun today. So, I'll start off with our questions.
Sure.
2023 was a bit of a volatile year in terms of PE activity. How do you foresee 2024 shaping up for Canadian private equity firms, especially with deals in the tech sector? Any particular trends or emerging technologies that you find promising?
Yeah, great question and a timely one as we jump into 2024.
Hmm.
I think 2024 is going to be a very productive year for Canadian private equity overall, but particularly for technology private equity. And, I think about it, I frame it in, two different lenses. One is the macro and one is looking at the micro. I mean, I think from a macro perspective, ignoring the recent public market exuberance, which is
Hmm.
probably a topic to itself, there's definitely confidence building in the public markets. There obviously, public markets are fickle, but we're seeing capital come back in. We're seeing prices elevate. And I think it's largely, on the back of a couple things, but one is namely like where interest rates, and they are, they are coming down. I think we're starting to see signals of broader market expectations that rates will drop and signaling a soft landing. And so I think from that perspective, the market is really pivoting towards more stability. From a micro perspective, that plays into how companies are looking at their business, and we're seeing this day in and day out that on the company side, they're now more able to forecast their businesses, and the volatility around 22,
Hmm.
23, very difficult for companies to really understand what their businesses were going to do and how they were going to perform. So with less volatility, more ability to forecast, it means more confidence from a business perspective in terms of where they're going and the investments that they need to make. And those investments come in a higher interest rate environment. So I think that there is generally more confidence coming into the market from the company side. And I think the last thing I'll say is, from an investor perspective, there is also more confidence. I think the ability for investors to build conviction in the investment thesis and in the company opportunity is growing, just as the company's ability to forecast their business is growing. And so, the net of it, a lot of people talk about buyer and seller expectations coming together, but I think some of these things are really underpinning why that's starting to happen.
Especially with the vintages of 2021, 2022 kind of not being recent history anymore. I think there's that normalization. But really good point on that confidence and that investor confidence, the company confidence. So when we see PE firms from across the globe investing in Canada, how do you find that current competitive landscape for deals in Canada?
Oh, great. Yeah, great question. Um, so, there's always firms around the world investing in Canada.
Mm,
And, these are great firms and they're wonderful, but ultimately this is not their focus area, just to say candidly.
mhm,
Um, but their activity up here to us is a real strong validation of what we're seeing, which is that Canada is wonderfully, one of the most attractive places to invest in well-built technology businesses. And so we love the validation. But I would also say founders and management teams of these growing tech companies, they have a choice. And importantly, many of them know they have a choice. And so, for those best companies looking for great, sophisticated, technology focused investors and looking for strong, like minded partners, I think Virtu is really the clear winner and the clear choice.
no, for sure. And a lot of conversation when it comes to value creation over the last year and a half has been focusing on technology solutions that companies need to implement. So, what are your views on this impacting the valuations of those technology companies that are servicing this?
Oh, okay. Yeah, good question. So I'll talk about some of the drivers and then I'll talk about the
Mhm.
result implications. So there's probably two things I'd say. The first thing is just the growth of software and tech spending generally. Like it's a $5 trillion market today. Gartner says it's growing to 6.5 trillion by 2027. But importantly, by 2027, Gartner estimates that IT spending growth is going to come basically from software and IT services versus the other components like data centers and devices and hardware and communication services and the like. So all of the growth is really coming from software and associated services. So that's point one. There's a lot of growth being driven in the market, and the demand is coming from these companies. As you talk about value creation. The second thing is, which I say all the time, and especially now we're in a higher inflation environment, software is the single largest deflationary force that businesses can employ to combat those inflationary pressures. And so cloud computing and workflow automation and copilot technologies by AI and all of that stuff is driving amazing efficiency. And that's what's going to propel companies to drive earnings forward and continue to grow. And so those are what software businesses are contributing to their customers. That's going to drive growth. And so that's what's going to drive valuation. It's the tech companies that we invest in have very strong growth prospects, very clear value articulation, and really strong quality of earnings. And all of those contribute to valuations for tech companies being strong.
Yeah, no, for sure. And actually, this leads very well into my next question. We understand Virtu looks for profitable B2B software companies, typically around over $15 million of revenue. So before a tech company considers approaching Virtu for a possible investment, what are some of the key metrics as well as risk factors that you're looking out for?
Yeah, great question. So if we turn it, to Virtu specifically, that's absolutely
Hmm.
right. We are looking at, enterprise or B2B software and software enabled businesses. But, to your point on KPIs, we're
Hmm.
often looking at high quality of revenue, so strong recurring revenues that come with attractive retention statistics. Recurring revenue businesses are in the business of recurring revenue, and we like that. We spend a lot of time understanding, if the company is underpinned by complex and proprietary intellectual property. That's obviously what's driving the differentiation and the value that they provide customers. We look for companies that have achieved a level of scale where they've built and progressed their business to a scalable business model. There's happy customers that are buying the product and continuing to purchase more, and largely are growing globally. Software sales are borderless.
Yeah.
But lastly, and most importantly, and I'll tie this, to the Virtu approach. We look for companies at that size and scale, but ones that understand themselves very well, where they are today, and what it's going to take to achieve that next scale inflection point in their growth journey. And they want a partner, an investor partner, along the journey with them, and that's what we look for.
No, and that's fantastic. So once that company gets investment from your firm, what can they expect to happen next? How are you involved in the value creation and the strategy of that business?
Right. So it's very timely. We actually just closed a recent investment, acquiring a business called Active State, and what we
Mm.
did there is what we do all the time. We build a pretty deliberate, methodical, diligence approach, and we learn as much as we can about the business, and then we evaluate the opportunities and risks associated with it. But I think what we do maybe a little bit differently is we're very open and transparent with the businesses about what we learned, how we learned it, and what the implications are. I think what's even more unique is we take all of that and say, these are the things that we think would help your business. What are the things that you think are going to help your business? Let's put it together and let's jointly work on an action plan to move forward with so that we have one strategy, one set of tactics to support that strategy, and one goal in mind that is consistent across the entire company. And that's typically what companies can expect to happen next.
No, that's great. That misalignment sometimes can cause a lot more issues as well. So that's fantastic. Okay, so finally, Virtu Capital, first female founded private equity firm in Canada. Of course, Lisa, your founder, involved in various initiatives in elevating women. She was also named one of Canada's top most powerful women. Looking at your team, they come from diverse backgrounds. And overall, we know Virtu is very, very supportive of diversity. So, with that lens, and knowing that there's upcoming ESG rules and regulations, and I understand diversity is just one portion of it, but how do you see that impacting technology industry and your portfolio?
Yeah, that's a great question. I mean, Lisa's built something amazing here. And, we are working to embed that in all of our portfolio companies. I'm so thankful to be partnered with her and to be part of this firm that I think is so unique. Um,
Mhm.
the thing that I would describe about Virtu, and listen, it's easy to say because we are building this business. It's very hard for an established business to get to this point, but for companies that are building and scaling, Virtu looks at diversity as an input, not an output.
Mhm.
And when it's an input, what you're doing is building an environment and a framework where different opinions and different perspectives coming from different backgrounds are all being put together to come up with the best answer possible. And so that is what we think about when we hear the words diversity. It's about how do you create an input mechanism to get the best opinions and to make the best decisions. So that's how I see Virtu in its approach, and that's how I see things impacting the tech industry. Because businesses at this size and scale have the capability to very quickly, turn the equation around to focus on the inputs, not the outputs of numbers and KPIs and diversity metrics, et cetera.
No, for sure. And as you said earlier, I think, with the global scale of the technology businesses, they are borderless. So there is that opportunity available as well.
Absolutely.
Perfect. So we're going to go into a fun round, our lightning round of questions. So
Okay.
quick questions, quick answers. First one, best source to stay up to date on market dynamics and intelligence.
Ooh. You know what? Funny enough, I'd say like my trusted network of friends and colleagues in the industry is where I get the most interesting sources of information.
Yeah, those tidbits, right, that you don't find on Google or ChatGPT.
Yeah, exactly.
Um, if you had to invest in a tech company right now, I know you just closed the deal, but if there was a new one coming up, what subsector would you choose?
You know what? There is a new one, but I can't talk about
All right. So we're going to take that pass.
it.
Okay. First thing that comes to mind when you think of AI.
AI, very pervasive in how AI technology will be leveraged in businesses.
Yep. So if you were to start a tech company tomorrow, what would be your founding principle or core value?
Well, okay, this one's easy because we starting Virtu, it's very similar. Um, Operate with integrity and transparency, focus on building trusting, enduring long-term relationships, and surround yourself with strong and diverse opinions. Uh, those are the principles that I would employ, and that
Yeah,
surprisingly, Virtue's employed.
exactly. No, that's amazing. And just a current or a recent book that you read that you'd like to share.
Oh, I'm on a hit right now of like not novels versus nonfiction. So I started reading a number of the Jack Reacher books because the show is back on Prime. So I wanted to catch up on the book versus the show version.
Yeah, and compare those differences.
Yeah.
All right. Well, thank you so much, Gil, for your time today. That's all the time that we have. And thank you to all the listeners for watching this episode of PE Market Pulse.
Yeah,
Thank
Brent,
you.
thanks so much for having me. This was great.
Of course. Of course.